Hello to all my fans. Just kidding, I don't have any fans, but I don't care, because what I do care about is helping you understand the stock market and what the news even meant the other day when they said that the Dow hit an all-time high. So what even is the Dow? So the Dow is actually short for the Dow Jones Industrial Average. It is one of approximately 5,000 US stock market indexes. So from all these 5,000 stock indexes, the three that are most widely followed are the Dow, the S&P 500, and the NASDAQ Composite. Whenever you hear people talking about the market going up, down, crashing, they're usually talking about the performance of one of these three stock indexes.
Is up an eighth. Yes! After plunging 75 points this morning.
Oh, I hope plunging means up and 75 means 200.
So the Dow Jones is the oldest one of the three, and it includes stocks of the 30 largest, most influential US companies. So think like Microsoft, Disney, Apple. You can look up the rest. Even though the Dow is like the OG of the stock indexes, it isn't really a fair representation of how the stock market is doing as a whole, simply because it doesn't include companies like Google or Amazon. And we all know Jeff Bezos is like rolling around in money right now. The reason why a company like Google is not in the Dow is because the Dow is a price-weighted index. So for instance, if you have two companies, one of them is huge like a Disney, and the other one is a small company, barely made it in the index, but they're both trading at like $50 a share. They will both have the same impact on the movement that the Dow will have, aka the amount of points that the index will move up or down. But if you add like a Google in there, then any change in the price of Google stock will skew the results of the Dow significantly, because it is only 30 companies, and this is why a lot of people don't think it's a fair representation of the stock market as a whole. The people who get to decide which companies get tracked on the Dow or not are the editors of the Wall Street Journal, aka the mean girls of the stock market, because they get to tell companies whether they can sit with the Dow or not. The 30 companies that are in the Dow today are not the same 30 companies that were in the Dow when it was invented, and not the 30 companies that will be in the Dow in 10 years from now. And this is because the Dow kicks companies out all the time. So even though the Dow isn't the best representation of how the US economy is doing, it's a pretty good indicator for investors. And that's why it was such a big deal when it hit an all-time high of 30,000 points the other day, during a recession. So that's the Dow. Well, hopefully that video was helpful to at least one person, so let me know because I would love to keep making them. S&P 500 is next. Bye!